7 January 2023, exactly a year ago, I discussed two stocks, CDSL and CAMS, that were once favorite of Dalal Street during COVID bull rally when they generated great returns. But then both stocks corrected significantly for more than a year and nobody discussed them. That's when I picked up these stocks to discuss whether they can outperform in 2023 or not, and look at the journey in 2023. CDSL did continue to underperform for next few months and touched a low of around 880 in March 23. However, the stock doubled from those levels in the next 9 months. What an outperformance. CAMS also underperformed for next few months to touch lows of around 2000 rupee, but then generated 40% return so far. Clearly, both stocks have outperformed in 2023. The question is, can both the stocks continue to outperform in 2024 as well? Another question I've received is, CAMS promoters have sold their stake in the company. So what can you interpret from this move? Hey everyone, my name is Sahil and this is my Personal Finance Academy. In today's video, we'll discuss the potential in CAMS and CDSL in 2024 and beyond. If you're following this channel, I've clearly mentioned that both companies are undisputed leader in their sector, which is almost a duopoly market. CDSL is the leader in Demat sector, where as per the latest data, there are about 14 crore Demat accounts in India, out of which CDSL itself has 10 crore Demat accounts. So you can imagine the dominance of CDSL. Another player is NSDL. Basically, if you want to invest in Indian stock market, then you need to open Demat account with either of these. Likewise, CAMS is an undisputed leader in Indian RTA sector, where it takes care of all the back-end operation of mutual fund companies, right from onboarding a customer, storing their data to facilitating transaction. Today, CAMS enjoys nearly 65 to 70% market share in Indian mutual fund industry. Basically, it manages 65 to 70% of total mutual fund transaction in India and various other back-end operations. What a sheer dominance it is. Interestingly, both are technology-oriented company with negligible debt and have got very high profitability. CDSL enjoys an operating margin in the range of 50 to 60%, whereas CAMS margins are in the range of 40 to 45%. Both companies enjoy high ROE and ROCE, where CDSL has an ROE of 24% and ROCE of 30%, whereas CAMS has an ROE of 40% and ROCE of 48%. Now, if you look at the overall potential in both Demat and RTA sector, I always say that it is just the beginning of Indian stock market and mutual fund industry. We are still in very nascent stages. We Indians always have been risk averse in the past few decades and always had inclination towards FD, insurance, gold and real estate. However, things are changing rapidly. Today, more and more people are joining white collar jobs and want to invest every month. Now, today, if a person has to invest his money for future financial goals, what options are there? FD rates in India are around 7%, whereas inflation itself is 6%. So post-tax return from FD are not even able to beat the inflation. Then real estate is not a cup of tea for everyone. Gold is a decent hedge against inflation, but it can't really create wealth as the historical return from gold are just about 8-9%. That's where the only possible option for majority of retail investor to create wealth in Indian market is via equity investment. Now, equity investment can be done via two ways: equity mutual funds and direct stocks. If you go with equity mutual funds, you would be indirectly generating business for CAMS. And if you invest in direct stocks, you would be directly generating business for CDSL. And this trend is very structural for the next many decades. The best part is, both companies are not yet big enough. CAMS commands a market cap of about 14,000 crore and CDSL market cap is about 20,000 crore. Clearly, if you look at the long-term bigger picture, the future of both the companies is very bright. Yes, in the short term, the returns from these companies can be volatile in nature because equity investment is cyclical in nature. When the stock markets generate great return, retail investors tend to invest more money via mutual funds and individual stocks. And that directly benefits companies like CAMS and CDSL. However, during difficult bear market, investment activities reduces and directly impact the performance of CAMS and CDSL. We have seen it in the past where both CDSL and CAMS outperformed during COVID bull rally and then underperformed for the next 1 to 2 years. However, in 2023, both the stocks have outperformed. Now the question is, what can we expect in 2024? So I had a look at management commentary as well as tried to analyze the industry performance and came across some interesting insights. Let's have a look. First of all, if you look at the macro setup, 2024 is looking very promising for the stock market. Indian economy is looking in good shape with banking sector having the best ever asset quality, government big focus on infrastructure activities, manufacturing activity in India are picking up big time, real estate sector has also picked up in 2023. Moreover, it seems we'll have a stable government coming in 2024. To add cherry on the top, after a prolonged phase of high interest rates, 2024 can witness fall in interest rate, especially in the second half of the year, and would create big liquidity in the market. This is applicable for both Indian and US market. And we all know that in the last couple of years, FIs have pulled out huge amount of money from the Indian market. I expect that money to flow again into Indian economy post general election results. Considering all these factors, the Indian mutual fund and stock market industry is looking very promising. Yes, there can be some corrections here and there, but by and large, the overall picture is looking great. Now, obviously, when equity market activities would increase, more and more people would open new demat accounts and invest their money in stocks and mutual funds. And it would directly benefit CAMS and CDSL. Now, if you look at specifically, CDSL has multiple growth drivers in 2024. First biggest growth driver is IPO listing. We have seen a huge surge in IPO listing in H1 of FY24. That was the major reason why CDSL business shoot up, and that got reflected in the share price. Now in H2 of FY24, also we have many IPOs in the pipeline. So that would be one of the biggest growth driver for CDSL in 2024. Moreover, the total number of demat accounts are growing exponentially in India. I clearly remember when I discussed last time, the total demat account in India were about, in 2020 were about 4 crore. That jumped to 10 crore in 2022, and now we are at 14 crore number. Out of this, CDSL itself has around 10 crore demat account. I think this number is only going to increase in 2024. Moreover, it is not just about the number of demat accounts. It's more about the activities. If there are demat account but there's not much action, then obviously CDSL can't make much money. So I expect that the demat account that have grown in the last few years would see more activities that would result in higher revenue per demat account. In case you are wondering how CDSL makes money, this slide gives a great picture. Around 35% of the revenue comes from transactions. More transaction means more revenue. Then 41% is from annual issuer charge paid by corporate, which is a recurring fee. Then 11% has come from IPO and corporate actions. This data is for 2023, and remaining revenue is from account maintenance, e-voting, and so on. Interestingly, CDSL business is not just limited to stocks. CDSL also has a subsidiary with name CIRL, that is CDSL Insurance Repository Limited, with around 54% holding that stores insurance policy in electronic format. So overall, in terms of business growth, CDSL has a bright growth prospect in 2024 and beyond. As far as valuations are concerned, since CDSL had rallied sharply in last 9 months, the current PE is on higher side at around 60. Having said this, CDSL is expected to grow at fast rate in 2024. That would help CDSL sustain its valuation. I've always mentioned that it is an SIP grade stock. In fact, I have a closed community of long-term investors where I also share my own investment details, and that clearly shows whether I hold CDSL or not. Along with that, I also share detailed analysis of key events in the economy, tracking the quarterly results and important updates in the stock market. Please note that I am not comfortable sharing my personal detail on the public forum, and hence I have created a closed community of serious investors. Now, if you look at CAMS, Indian mutual fund sector is growing rapidly with SIP book crossing levels of 17,000 crore per month. The most interesting part is that Indian mutual fund industry is still in very nascent stages. The total AUM of Indian mutual fund has recently crossed 50 lakh crore. Now this might look big, but just for reference, US mutual fund industry is $35 trillion. And in terms of dollar, Indian mutual fund industry is just 0.6 trillion. So you can imagine the gap. Now interestingly, CAMS is not just eyeing revenue from mutual fund sector. It is expanding its universe to alternate investment fund, PMS and wealth management service, which are again in very nascent stage in India. This segment has grown more than 100% year on year for the company. Now there was a concern around promoter selling stake in CAMS. Let me clarify this. First of all, CAMS does not have individual promoters. Its promoters was Great Terran, which is an affiliate of a New York-based PE firm named Warburg Pincus. Now essentially it is an FI, but because it invested at an early stage in the company, it got the status of promoter. I hope you got the logic. Now this company invested in CAMS in 2018 at weighted average cost of 717 and sold stake at 2700. So company made nearly 4 times return in last 5 years, and that's what PE firm does. When they make good return, they exit. The important question here is who purchased the stake. So here is the list. You can see Great Terran sold around 97.5 lakh shares and is purchased by White Oak India Equity, Societal Journal, India Akron, Abu Dhabi Investment Authority, Kotak Mahindra Mutual Fund, Morgan Stanley, IIFL, Goldman Sachs, Birla and UTI. All are institutional investors. Now, in my opinion, the interest of these top institutional investors is actually a great sign. If the stakes were purchased by retail investor, then it would be a concern. But in this case, it is actually a great sign. Some people confuses stake sale from operators as negative, but you should always ask who is the promoter. Is it an individual or an investment firm? And more importantly, who is buying it, institutions or retail? This was a similar case with Aavas Financiers, even with Gokuldas Export. So I hope now it makes sense. Another aspect is that CAMS is currently trading at around 2800 rupee at a PE of 47. By the way, the stock is still down from the highs of 4000 rupee. Considering its leadership in the segment and future growth potential, I think the valuations are looking reasonable. Overall, if I conclude, 2023 was a fantastic year for both CAMS and CDSL, and both companies outperformed. Considering the overall macro scenario in 2024, I expect the outperformance to continue. And as far as future is concerned, both companies are beautifully positioned to benefit from India's rising interest in equity market, which is still in very nascent stage. And the fact that both companies command a very strong leadership, with CAMS having nearly 65 to 70% market share in RTA segment and CDSL having nearly 70% of total demat accounts in India. On top of this, both are fintech firms with almost zero debt and very high profitability. In my opinion, both are SIP grade stocks, and I always mentioned that in the past as well. Having said this, I expect you to do your own research and diligence before investing your hard-earned money. Now tell me in the comments, do you hold CDSL and CAMS in your portfolio? And if you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.